Good morning, lads and ladies. Welcome back to another video. Today we're going to be looking at a concept known as living off of dividends, and more specifically, why it is fundamentally flawed and does not, in fact, work. So first off, what is dividend investing? Well, I am glad you asked. So let's break it down. So when you start investing, you will no doubt come across something that is called a dividend stock. An example of this would be Apple. So what this means is that each year, Apple pays its investors, it pays the people who own Apple stock a percentage of the profits that Apple makes. Now, Apple's most recent annual dividend was $0.82 per share. So what this means is that if you owned 100 Apple shares, then each year Apple would pay you 100 times $0.82, which equals $82 per year, just for owning their stock. Sounds great, right? Now, it's important to note the common misconception here. You see, I said that Apple would pay you for owning their stock, but the word pay isn't as straightforward as it may at first appear. Remember earlier when I said that dividends are a percentage of the profits that Apple makes. So what that means is that instead of those profits going back into the company, they're actually going to the shareholders who, if they're living off dividends, will use these dividends or profits to pay their bills. Now you might say, okay, so it didn't go back into the company, but the money came to me instead. That's even better, right? Well, yes, but actually no. In fact, whether or not a stock pays a dividend makes no difference to your net worth whatsoever. And the reason for this is because the distribution of a dividend results in the reduction of the value of that stock. So let me explain. Let us assume that we have two otherwise identical companies, one which pays a dividend and one which doesn't. Let us also assume that I own one share in company 1 and you own one share in company 2, and that the stock price of these shares is currently $100. Then, over the year, the stock price of each of these companies grows by 20%, or rather $20, making the stock price of both companies at the end of the year $120. Now at this point, your company, let's call it company A, pays you a $10 dividend, reducing the value of that stock by $10. So now, your net worth consists of $10 in cash in the form of the dividend that company A just paid you, and $110 in shares, as this is what your share in company A is now worth. On the other hand, at the end of the same year, my company, let's call it company B, does not pay a dividend, and so the stock price remains at $120. So as you can see, your net worth and my net worth are still the same, regardless of the fact that you have received a dividend. The only difference is that you have part of your net worth in cash. So what this means is that if you attempt to live off dividends, if you go and then spend that cash, you will then be reducing your net worth by $10. Unfortunately, the widespread misunderstanding of how dividends work creates the illusion for many people that if they own enough dividend stocks, they can just live off the dividends that these stocks pay without any downside. However, as we have just established, that is unfortunately not the case. You are not receiving free money when a stock pays you a dividend. All that has happened is that the company that has paid you that dividend has essentially forced you to convert part of your share price into cash, and the result of which is that you are probably more likely to spend that cash, and thus, as a result, slow down the growth of your investment compared to that of someone who didn't receive a dividend. The other issue with attempting to live off dividends is that you're exposing yourself to more risk. But how so? Well, in order to have a sufficient amount of dividend income each year, you would have to own a very concentrated portfolio of dividend stocks. But diversifying your investments is a huge element of long-term investing, and as such, limiting the stocks that you invest in because of a desire to only invest for the sake of dividends significantly reduces your market exposure, while simultaneously increasing your risk. And that, lads and ladies, is why dividends are irrelevant, and why living off of dividends does not work. Okay, so that one was a bit of a slog, but I really hope that you got something useful out of it. Now, videos like this take a lot of research and time to create, and so if you wouldn't mind hitting that like button, I would really appreciate it. It doesn't cost you anything, but trust me, it really helps the channel and the exposure that my videos get. Also, if you enjoyed this video and you would like to see more content about making money, saving, investing, and building wealth, then go ahead and subscribe. I upload videos every Monday and Friday, and I really hope to see you in the next one.